So what are we talking about today? Today we're talking about the budgeting process, but it's not about the current year operating budget. Yes, we're going to be looking at the current year and prior year to get some figures and to investigate, but we're talking about the filing of the tax budget for next year. So we've got a lot of new fiscal officers out there, maybe that didn't take the training last week, that explained the difference between the two. There are several counties that have abandoned the filing of the tax budget. And I don't want you to go to all the work to do the budget to find out that your county doesn't do it. So if you haven't contacted your county, if you're brand new and you don't know whether you have to file a budget for next year very soon, then you want to call your county auditor's office to see whether you're in one of those counties. And if you are an experienced fiscal officer and you're assisting some of these new fiscal officers, if they are in a different county than you, don't assume that they're following the same procedures. So for those that you are mentoring and training those new fiscal officers, make sure you understand their county's rules as you're guiding them through this process. So go forward, Trina, not backwards. And so most counties still require, the last I knew there were 18 counties, I think, that did not do the budget anymore. That could have changed, but nobody ever calls and tells me these things. And I haven't investigated that to see how many of the 88 counties are no longer filing the budget. So the fiscal officer or clerk treasurer is the one stuck with most of the work, if not all. And I think when I say most of the work, some of you are laughing because you know you have to do it all and pretty much guide people through it. But in some cases, the fiscal officer provides the core information that's necessary, and we'll talk about that, and someone else comes up with the figures that you're just going to plug into the software to produce the budget that's going to be filed. I say start early, but actually this is not really early. This is coming up on, oh my gosh, now I have, less time to get this done. So if you're new, please start now. Please start this process now, because it's going to take a while for you to investigate and figure out what figures are supposed to be used. So start early every year. We got calls last week, people using the budget module, and they've forgotten things. It's a year. So we have a lot of experienced fiscal officers in our audience because they know it's best to refresh your memory on something you only do once a year. Kudos to you guys for showing up for the training. I need you to understand your deadlines and work backward from those to understand what has to be done by a particular date. So your deadline to adopt, before I start with that, let me ask the question, do we have any libraries that are associated with a school district in the audience? I believe you can raise your hand or you can shoot me in the question box. Yes, I'm a library associated with a school district. Those folks, libraries associated with a school district, have earlier filing deadlines. They file, I believe, with the deadlines of the school district. And if you are a library associated with a school district and you haven't started yet, you are way behind. So it looks like no hands are raised. We don't have any libraries associated with the school district in our audience today. Okay. Well, Deborah has her hand raised, and Jenny. So if you are a library associated with a school district, you probably already know you've got earlier filing deadlines. If you're confused about this, contact your county auditor's office to ask the deadline you're filing. So it doesn't apply to any other type of entity, only libraries associated with the school district that have earlier filing deadlines. So there is a deadline for your governing board to adopt. July 15th. You got to get it adopted by the board by that time. And then you have 5 days to get that filed with the county, which is a matter of, in the old days, we used to just take it and drop it off or mail it. I don't know that mailing anything is a guarantee that it's going to be filed in time anymore. Some of you are saving it as a PDF and emailing it. And I don't know whether your county wants to print all of those because they would have to print 2 copies. But that may be an option in order to get it filed on time. You'd have to contact your county auditor to see if that is an acceptable way to file. Probably not, but maybe. Notice there's an asterisk next there. There is an option to request an extension, but the fact is you should have plenty of time if you start now without getting an extension. But remember, we've got a lot of brand new fiscal officers that have come in since the beginning of this year, and they are trying to figure out how to meet payroll and get the bills paid for the meetings and figure out what taxes haven't been paid and what OPERS reports haven't been paid. And it is very difficult for them to even consider what to do next year. These deadlines are very, very important. So you have to understand the deadlines. Now you're going to need to know what meeting dates you're going to have with your governing board so that you can ask them questions, because you're going to need to talk to department heads to determine what their needs are. For example, you need, if you've got a police department, what kind of training budget would your police chief like to have? What kind of fire departments have the same thing? They have to get training scheduled to keep their people certified. And EMS, the same thing. Sometimes even EPA, licensed water and sewer operators, have to take a certain level of training within so much time. So you want to ask the questions. What equipment do they need to replace? What equipment is getting in bad shape and is going to need more repairs? You're going to have to understand things like these. Libraries, the computer equipment going to be replaced. Building maintenance. What major maintenance items are going to have to be done? Is the parking lot going to have to be paved? Is that going to get done next year? We're going to push it down the road to the year after. So you have to understand, if you're new, you can't just make up this stuff. You're going to have to talk to people to figure out what they need and what they want. So wants are sometimes unrealistic. Everybody would like new vehicles, but there are things you're going to need to know. And just because a department head wants something does not mean the governing board wants to put it in the budget. So our cemetery guy wants brand new zero-turn mowers, and the governing board says, yeah, he asks for those every year, but the mowers we have do the job. So you see, it's not always a matter of you're going to budget what a department head wants. These things have to go back and forth. And our experienced fiscal officers, these conversations have already been taking place. They've been keeping notes on what's going to be used. So you're going to have to schedule some time to talk to people about what they need, and you're going to have to put that stuff in front of the governing board and say, yes, no, put it in the budget, footnote it, or we might end up doing that this year. Okay, so you have to also set the date of the budget hearing. So a lot of people set the budget hearing 15 minutes before a regular meeting, and it's done that way. Other people set it on a date all by itself. You have to make sure you're going to get a quorum. So we've set meetings before and the council members forgot about it. So you have to make sure you're setting a meeting and make sure everybody knows if it's all by itself or to come 15 minutes early to the regular meeting, nag. Because if you don't get a quorum, you're going to have a problem. You have to publish the notice of the budget hearing in the paper 10 days before the hearing date. So let's say you set the hearing for July 2nd. I'm making that up. That means 10 days before July 2nd. That's got to be in the newspaper. So what dates does your newspaper publish? You can't just assume that if you set it up for a certain date, you're going to get something published that day. You need to work this out, so it's going to be in there at least 10 days before. So the publication is necessary, and what a lot of people don't pay attention to is that actually the rule says you got to have 2 copies of the budget that's going to be presented at the fiscal office, ready to hand over to anybody that sees that article in the paper and says, well, I want to get a copy of that. And they contact the fiscal officer, and she's like, well, I haven't even done it yet. You're supposed to have something ready to present. So the budget hearing is not the date you start thinking about what's going to happen. It should be the wrap-up period. And so it hasn't been adopted before then, but there has been discussion, and you're fleshing out the figures, and you should know what you're putting. It doesn't mean that they can't make a change to what's put in there, but you have to have 2 copies ready. And I've talked to fiscal officers on the phone support line on the deadline to file. So they're calling on July 20th saying, I can't figure out how to use the budget software. So I'm wondering how they had a budget hearing and got that adopted if it doesn't even exist yet. So folks, pay attention to your deadlines and be ready. Also, if you've got a regular meeting scheduled for July 14th and you're thinking, well, I'll just tack that on 15 minutes before the July 14th regular meeting, and you've got 3 trustees and 2 of them are sick and the meeting gets canceled, you are now past the date. How are you going to get a meeting scheduled within 10 days to get that in the paper? You're going to have to request an extension. And there's no such thing as any more than a 30-day extension, and your county does not like to grant that. So I wouldn't recommend scheduling your budget hearing right up against the deadline to adopt. I would go a little earlier than that. If you could get adopted in June, that'd be great for you because then it's behind you. But you might not be able to get that done. So July 15th is the deadline, the absolute last day it can be adopted without requesting an extension. And your counties don't like extensions. All right, so the first thing you're going to have to figure out is what funds should be included. So, the basics are going to be there. Your general fund, your gasoline tax, your water, your sewer, your street, right? The basics are going to go forward every year again and again and again. But it's the extra funds you need to think about. So when I say extra funds, I'm thinking everybody should be done with their original 2020 CARES Act fund, because the deadline for that finally did occur. I think all that money should have been spent and sent back, and nobody's going to be needing to take that into the new year. But there were different kinds of CARES Act funding that may be going forward. And of course now the ARPA grants, those are going to move forward. So are you spending all of the money you're going to get in your ARPA fund this year, or is it going to be something that needs to be carried forward into the next year? Okay, so these are the first things you got to think about. Don't budget a fund that doesn't need to be budgeted. Carry forward into your budget only the funds that need to be budgeted. For example, if you have a fund like unclaimed money, and the unclaimed money fund in your system is one of your custodial funds, and your system is set that your custodial funds are not budgeted, then they don't go on the budget because they're not budgeted. But if your custodial funds are budgeted, they have to be included in the budget. So the budget components, we're talking about the tax budget components, have the same 2 components that the current year operating budget has. You have to figure out the estimated resources available. You're not going to have exact figures. These are estimates. And then you're going to figure out planned expenditures. They're not appropriations. They are planned expenditures. We have to understand that the revenue estimates that you put in the software are going to carry forward and have a significance in your next year budget. So I want you to understand what the timeline is for this. So you start preparing your budget, and part of that is estimating next year's revenue. You schedule the budget hearing and adopt it, and you think, well, that's the end of that. I file it with the county, and I'm done, right? Well, you're not done, because the county then sends you back an official certificate of estimated resources. They have looked at your estimated revenue and decided what to certify. This document limits the amount your board is allowed to appropriate in the new year until you get your first amended certificate. So the revenue estimates that you put in this budget need to be done well. Pay attention to your revenue estimates. Do the best you can, because this is going to go forward. In October through December, you're going to be preparing those temporary appropriations. And why do I say that? Because in December and January, we get hundreds of calls from people trying to figure out how much they need for their temporary appropriations. That should have been decided long before year end. So for those of you who made it through January with your temporary appropriations, and we had lots and lots of calls. I'm out of temporary appropriations, and it's only January 15th. Or I didn't appropriate a debt that we have to pay in January. Or I just divided my total planned appropriations by 1/4 because your temporary appropriations are only good for the first 3 months of the year, so they just divided everything by 4. But you have an annual debt payment in January. So that should have been temporarily appropriated for the January debt payment. So we get a lot of calls. And the problem is people are either recycling the same temporary appropriations year after year, or they prepared them because they're new and they just didn't get it on the mark. So you want to spend time before the busyness of year end figuring out your temporary appropriations. Look at what you had last year, the beginning of this year, and determine what errors were made. I didn't put enough in salaries. I didn't pay attention that it might be snowing and extra overtime for snow plowing, blah, blah, blah. Lots of things, anything you forgot, and be better prepared for this year. In January and February, you're going to be closing that prior year, and you're going to certify your fund balances, your actual ending fund balances, to your county, and including those same revenue estimates from the budget. Some counties allow you to tweak those numbers, others don't. And that starts the cycle over again. You get March and April as slow times, and then boom, you start the budget again, and it goes around and around. So your revenue estimates are going to play a role, and you'll be stuck with them in some cases. So pay attention to those revenue estimates. The budget year resources available, because we have to figure out how much do we think we're going to have to plan to spend. It starts with the current year estimated unencumbered fund balance. So yes, in May of this year, you have to figure out how much you're going to have December 31st. Not easy, right? You're thinking, oh my gosh, this is just so hard to figure out. Yes, it is. It's your best guess. But in some counties, it's not a guess. They're going to hold you to this formula. You take your current amended certificates, resources available, you subtract 100% of your current year appropriations, and that is your estimated year-end fund balance. Okay, that's an easy formula, plus, minus, equals. Except if you appropriate 100% of your resources available on your amended certificate, your estimated year-end fund balance is going to be 0 in every fund. So this formula is what some counties are going to hold you to. Now remember, your current year appropriation legislation, when it's you adopt your permanent appropriations, you send a copy to your county auditor. So you can't just put in different numbers in the budget unless they allow you to do that. So let's talk about this. So some counties hold you to this formula for your estimated year-end fund balance. You need to contact your county if you don't know their procedures. Must I consider the current year appropriations as if they're all going to be spent? Because in a lot of those counties, the answer is yes. You adopted them. That means they could spend every single penny. It's not likely, but it's possible, right? It would be legal because they have the appropriations, which is the authority to spend, and they could spend every penny. That would be terrible governing, but some counties hold you to that. However, if they hold you to that, they often allow you to budget the new year expenditures fully, because we all know that you carry over money at the end of year, and it is nowhere near 0, right? Some of you are carrying over 100,000, 150,000 in a fund, 30,000, but nobody really knows what that number is going to be. But if your county holds you to considering current year appropriations as if they'll be spent, can you budget the new year fully, or are you going to have to budget only your anticipated revenue? I'm going to show you an example of this. And then there is a second option that some counties allow. They let you, within the budget software, change the current year appropriation column to what you think you will spend this year, which gives you a more realistic ending fund balance. Well, it's an estimated ending fund balance. So if they let you do that, they probably will not let you budget the new year beyond those resources available, because now you have a better estimated year-end fund balance, which means you will budget within your budget year resources available. So you have to know which one of these options your county is going to allow. It's not a UAN question. The software is going to let you do it either way. You have to know your county's procedures. So the new year estimated revenue, how do you figure that out? Well, you have to know whether your current year revenue budgets are good estimates, because that's the starting point. I just got done in January certifying my revenue estimates. I should already know exactly what I'm going to get. The best guess I could get this year. Of course, there's going to be changes. Some people will pay back taxes, some people will not pay their taxes. Things like that are going to occur. But you've got good estimates. Okay, so if you've been a fiscal officer for 10 years, you've probably got that figured out. But what about the folks that are less than a year in the job? How about the ones less than 6 months in the job? It's going to be really difficult for them to know whether the revenue estimates this year are good, because they're not the ones that put those numbers in the system or sent them to the county auditor last year. So they're going to have to do some research before they're going to be able to know that, because that is your starting point. These revenue estimates are good for this year. All I need to consider is what's going to change. So what would change a revenue estimate? Well, if you're a village and you've got water and sewer, let's say, for example, you have your governing board has implemented a water rate increase, and it's going to go up in increments. So this year it's going to go up 1%. Next year it's going to go up another 1%, and the third year it will go up the last 1%, giving them a 3% increase in revenue within those 3 years. So some people do know that the revenue estimates are going to go up for the new year. When it comes to consumer-driven revenue, things that the public buy from you, little difficult to estimate, because the weather, the economy, these things affect consumer-driven revenue. And we're going to talk about that more when we get into the software. But you have to know these things. Starting point is, I need good revenue estimates in the current year, and some of you have inherited a mess. And there aren't good revenue estimates. Nobody actually knows how much money you're going to get, because it's such a mess. So you have to do your best guess and then base next year's revenue on, I think these numbers are good for this year, and I think they will be good for next year as well. But you are doing your best to get good estimates. And that's what it says. Take the time to prepare those good estimates. So the folks that are new, you're going to have to spend time doing some research before you know what whether your current year revenue estimates are going to hold up. I'm going to take you to some reports to show that. Now, the planned expenditures are not such a weight on your foot, because while you need good planned expenditures, I consider the fact, guys, you are the government. You do realize you're the government. I personally want my government to sit down and plan next year before January. I really would rather like them to plan what's going to take. So I talk to fiscal officers on the support line all the time. The funds are out of money. Well, how did it get to this point where the water fund only has $3,000? Because that didn't happen overnight. That has been happening for a period of time. The money is going down and the income is not enough to support their operations. So sometimes when there's been a large turnover of fiscal officers, and I tell you, since 2020, we've got entities that have had 6 to 8 fiscal officers since 2020, and nobody was in the job long enough to figure it out. And it's going to take somebody who is strong enough in character and integrity to dig their heels in and learn the job and stick with it. But the fact is, it's not a prison term. If it can't be done and you walk away, you hope someone else will pick up the stick and plan it. But you have to have a good idea of what's going to be spent for next year. What are the requirements of our spending, so you can see whether there's going to be enough money. That has to be planned to get around, and we've got a couple of examples of that. We're going to be doing the budget in the budget module. So some of you have never touched the budget module. It's under budget, transactions, and financial worksheets is what we use to do it. Now, in addition to the financial worksheets, there are several reports that go along with the financial worksheet. The financial worksheet isn't the total budget. These schedules, with the exception of this one item, the cash flow year-over-year export, is a report that will export and show you the current year compared to several prior years. And that's not one of the schedules you have to include. It is not included or filed with the budget. This is for you to look at to help determine whether things are estimated well and what's going to happen if things don't change over a period of time. You can see cash flow issues when you're looking at that. So it's a good report to look at when you're trying to figure out how this year is matching up to prior years, but it's not one of the budget schedules. The rest of these items, bond, budget certificate, county auditor's estimate, final judgment, permanent improvements, and schedules A and B, every one of these, even if it's just a blank page, should be included with your budget. So some of you don't have final judgments. Print the blank page and include it so your budget commission knows you didn't just forget. Well, that's not where we're going. So what that means is I realize right now we're going over into the software and actually go to budget, transactions, financial worksheets. And I was practicing this morning, so I'm going to delete that one. And I have spent the time completing 2 complete budgets for 2023 using both options. You are not going to have both of these types. You're not going to have to prepare 2 budgets. But remember, we have 2 different policies for counties. Some of them require you to consider current year appropriations as spent, or as adopted, current year appropriations as adopted, and the others are required to change the current year expenditure column to what you think you will spend rather than what you have appropriated, and that gives you a more realistic estimated year-end fund balance. So you have to know which one your county does. So I have added these 2 so I can show you examples throughout the training. Everybody, when you go in here the first time, the first thing you want to notice is the year is 22 because it is 2022. And the UAN software years are based on the year the work is done. The year 2022 is when we produce the 2023 budget. So when you add, and when you start you're going to add, it's going to give you the 2023 budget. So we had people call already, they're trying to choose 2023 from the drop-down list, and it's not possible. The 2022 will give you the 23 budget because that's when it's prepared. And there's my lunch alarm, which I will ignore. I forgot to shut that off. Okay, and so if I wanted to see the tax budget we filed last year for 2022, I'd look under work year 2021. You see that each year you do the next year's budget. So of course in 22 we're going to prepare the 23 budget. Now everybody using the UAN software will see a prior year master worksheet. This document doesn't have to be edited by anybody who has closed 2 years in the software. All of this brings in all your prior year history. It doesn't need to be edited by folks that already have 2020 and 2021 closed in UAN. But we've had new clients in 2021 and 2022, and they will not have 2 years of posted history in UAN. And the tax budget requires 2 years of posted history at a minimum at least a couple of funds. In UAN, it does all the funds, the history. So if you were those maybe 20 people that don't have 2 prior years in your system, I think I would give the county auditor a call and ask them if you can produce your tax budget without the 2-year history, because you don't have it in your software, and you may not have access to the software that produced those figures. You probably use your annual financial report to complete it in some way, but if your county lets you go without the 2-year history, fine. And that's only for the new clients who have come on in 21 and 22 that don't have 2 years of history. Nobody else has to touch this document. So if you are one of those 20 people that has to, and your county is going to make you put in the prior year history, you're going to edit the prior year master worksheet and only fill out the years that are missing. So if you've got 21 in there, all you have to do is fill out 20. Don't go back before that. Just do what you have to get your budget filed. Okay, so everybody else is going to start this process by clicking the Add button. And you're going to give it a name. So what would I call it? I would call it 2023. You can call it Fred, Alice, but 2023 makes more sense. And you can see that the software is automatically going to pull in your 2 prior years and 1 projected year. That's your budget year. And then you have to determine what funds. Remember, I told you have to look at your list of funds and determine what has to be brought forward. So in the budget module, I'm going to select all, and then I am unchecking my unclaimed money fund, because that is one of my custodial funds that is not budgeted. So it does not go in the budget. Some of you are going to have capital projects and some of you still have CARES Act funds. And we're not going to talk about deleting old funds. We're talking about the budget today. So every second I spend answering questions that are not budget related is going to take time away from talking about what the webinar is about. So it is easy to uncheck a fund that you don't need to include. You just uncheck it and it won't be in the budget. So if you've still got your CARES Act and it definitely won't move forward, uncheck it. My American Rescue Plan, we plan to spend every bit of that this year, but it might not happen. But as of right now, I think we will. So I'm not going to budget it. So I'm going to fill in what I need to budget, and then you have to make a decision about prior year carryover. So if you had carryover encumbrances, especially if they were a substantial amount, so for example, you bought a fire truck and you have a $250,000 carryover purchase order, you're definitely going to want to use that. Combine any open prior year encumbrances with the current year appropriations. Because the fact is, your current year appropriations are based on just current year appropriations spending that money. When you have a large carryover encumbrance, it's actually going to spend your cash too. So you need to include. I know a lot of entities that don't carry over any encumbrance, and the fact is both of these settings would be the same for them because there's no carryover encumbrance. I think if you have carryover encumbrances, you should be marking combine. However, if you're a new fiscal officer and your former fiscal officer carried over loads of purchase orders that should have been closed and they can't be used, you do not want to combine them. You would want to go with only include current year appropriations. So that's only for the folks someone carried over a mess of things they cannot use. All right, so once you completed that decision and this blue question mark, remember, blue question marks in the software are going to get you more information. Doesn't harm anything to look and see what it has. It kind of explains more what I've just told you. The software will use your carryover encumbrances combined with appropriations. Click OK. And this is our budget financial worksheet. It's a very busy, frightening thing. Okay, so you can see up here in the top, there's the name I gave it. To the right, there's all your funds. These are the funds you decided to include in the budget. Now, if you pulled a fund in and later find it's not going to roll over into the new year, that project is going to finish in July, we definitely won't need it. There is a way to delete it from the budget. So all of my funds are listed here. The software always starts on the general fund. Notice that it shows me 2 prior years and 1 projected year. But if I have more than 2 prior years, I can look at more. I don't file my tax budget with more. The tax budget, when I actually print the final version, is just going to have the 2 prior years. But if you want to see more history while you're in here, you can. So the tabs we have is the revenue tab and the expenditure tab. Pretty straightforward. These are my revenues. These are my expenditures. Now, some of you do interfund transfers, like particularly X fund always transfers X amount to Y fund. You guys are going to have to use the other tab because transfers in, this one, and transfers out are other. They're not expenditures in so much as paying somebody electricity, contracted services. It's actually one fund sending money to another fund. So you're going to find those items. Notice you'll see fund balance adjustments. Well, nobody's going to plan in the future to do fund balance adjustments, but it does show the history of fund balance adjustments. So voided prior year warrants would be listed here. Items audit adjustments would be included in fund balance adjustments. It's not something you plan to do. It's something that shows up in your history. I do want to show you advances in and advances out. I wonder, does anybody have unpaid advances from a prior year that rolled over to be paid back in the current year? Raise your hand if you have unpaid advances. Because I wanted to show you what you have to do in the tax budget, but I don't want to take the time if nobody has a need to know that. I see no hands raised. So I had planned to show that if we had anybody that needed it, but I won't. So advances are not budgeted. It is a movement of cash. So you can see here that in 2021, the general fund got paid back part of an advance from a prior year. So it's not a budgeted item. We don't have an advance in budget that gets certified on our amended certificate. It's a payment back of cash between two funds. So I'm not going to go any deeper. I think there is one hand raised. 2. Okay, everybody else, I do not want you to get confused by this. But we do have people in the audience and people who may watch the video later that need to know what to do about that. So remember that we have, the software is going to use the formula, your current year resources available, which is made up of your January 1st balance. Where does our January 1st balance come from? Our December 31st ending balance, plus the current year revenue estimates. That would be this column. That's our resources, plus our current year revenue estimates. That gives me an amount available to appropriate, minus 100% of my appropriations. And in my case, this is unexplainable. You're thinking, why, Trina, do you have $626,000 not appropriated? Well, I have to build in scenarios so that I can cover information. So let's go look in accounting where this number is coming from. So I'm going to go to accounting, reports and statements, budgetary reports, and I'm going to choose comparison of budget and appropriated. Select all of my funds and display that. So this is going to show me exactly what that formula is bringing in. This is my total estimated resources. It matches my amended certificate. For those of you who haven't verified these things yet, don't start your budget financial worksheet until you get your correct revenue budgets in. So I know we talked to some people last week in the webinar, How to Manage Your Current Year Operating Budget, that said that their revenue budgets in UAN aren't right. Well, then you don't want to start your budget financial worksheet because it's going to pull in those revenue budgets in the current year. So get your budgets right before you start. And that should have happened already. So this column should exactly match my amended certificate, which says this is the total amount we are allowed to appropriate. Now notice here's an unpaid advance. The gasoline tax fund owes back $50,000, and that's already taken into account in this column. But the budget module doesn't see the advance being repaid because it's a budget. It's pulling in budgets and advances aren't budgeted. This column represents my current final appropriations. This is everything my board has appropriated by fund. If you have not verified these numbers match, you want to do that before you start the budget process because it's going to pull in these numbers. The variance column is the amount you have available to appropriate here, which is not yet appropriated here. It doesn't mean it won't be appropriated by year end. It simply means it's not appropriated yet. And $600,000 is a ridiculous amount. So I've built in some scenario because we get questions like this. So our entity received $600,000 from a source a couple of years ago, and since we received it, there has been a legal battle over whether or not we are permitted to keep it. And until that is resolved and we are told we get to keep the money, we are not appropriating. Because if we spend that money and then it's determined we can't keep it, we're going to have to come up with $600,000, right? So my governing board has not appropriated that $600,000, but we also have not appropriated $76,902.32, which is just part of our normal resources available. So that's why I have such a large variance in the general fund. We have money that's in dispute. I might have to send it back. Now my other funds are more realistic. This is the amount my gasoline tax fund could additionally appropriate. Notice my road and bridge fund. Road and bridge is appropriated at 100%. Exactly what is on my amended certificate is exactly what has been appropriated. And some of you, all of your funds are exactly appropriated to match your amended certificate, which means your estimated year-end balance at the beginning of the budget process is going to be zero, and you might be held to that. So I can tell what my end of year estimated fund balance by that formula is going to be because my variance column is exactly what has not been appropriated, with the exception of advances not repaid, because I have to tell the budget software that those are going to be repaid this year, which will change my estimated year-end cash balance. So I'm going to go back to the financial worksheet. If you have unpaid advances from a prior year that are going to be paid back this year, this is an edit you will have to make. I'm going to go to the other tab in the general fund, and I'm going to get the advance in this year. So notice I got half of it last year and half this year, but we made the initial advance out of $100,000 last year. 50 was paid, 50 is going to be paid this year. You have 12 months to pay them. So you see that? That just changed my estimated year-end balance because I'm going to get that 50,000 back. Now I'm going to save and go to the gasoline tax. And I have to have the advance out account. And I'm going to tell the software the gasoline tax is going to pay that advance because that reduced the estimated year-end balance of the gasoline tax fund. Now I want to show you up here I'm on the gasoline tax fund. When I click save, the system sets back to the general fund, which can be very annoying, but that's exactly what it's going to do every time. So you can go, I can go to the road and bridge fund, and let's say I estimate the revenue for next year. So if your revenue estimates this year are good, you've done your research, you know the revenue estimates are good, I'm going to get property tax. So on my road and bridge fund, if I looked at my current amended certificate, exactly what's in these two columns is my taxes, because property tax allocation is your rollbacks. That's rollbacks and homestead. That's your taxes that the state reimburses, and this is what your county is going to distribute to you, the gross. So this account plus this account should equal taxes. In most cases, that's what your county auditor's showing in the taxes column. So if I know this is a good estimate for the current year, very simple to say, now you could come over here and type 11,924 and press enter, or I'm going to put that back to 0. If you want it to be the same number, it's a 0% change. And my rollback, so if my county certified this amount in taxes, there's no other sources in this fund at all, then I know that's a good estimate for next year. There's no change in our tax base that would make that difference. So if it was certified as taxes this year, it'll be certified as taxes next year in most cases. So easy to fill in the new year. But again, your current year revenue estimates need to be good estimates first. So if I move around now from tab and tab, I don't need to save. I didn't explain these other two tabs. These two tabs, display by program, display by object, it's just a way to look at what you've entered. It doesn't change anything. So I can move around these tabs without saving. I'm not going to lose anything. If I save, it's going to go back to the general fund. And then I'm going to go back to the 2031 fund. So good to save your progress, but remember it's going to flash you back to the general fund. You can move around a tab within the same fund without moving. So let's talk about the current year. So if your county tells you that your current year column should be accepted as appropriated, you don't have to touch your current year column unless you have those advances to be repaid. That's the only one you'd have to deal with. The rest of it is as appropriated, even though the estimated fund balance is ridiculous, because we're not going to spend 100% of that. We're going to spend some of it, maybe close, but this is the amount that my county says if it's appropriated, I have to consider it spent. In that case, I am going to budget 2020. Now, if I try to budget 2020 with the same figures, what's going to happen? I'm going to end with a negative, right? So when your county holds you to as appropriated, they usually will let you appropriate. Let's round those out so it's more sensible. Because the only reason these two accounts have odd figures in them is because I split the difference when we did our permanent appropriations. So if your county holds you to as appropriated, they will usually let you budget more, which means I'm going below my resources available in the new year. But I'm going to save there. If your county lets you change the current year column to what you think you will spend, you're going to be editing this column. Now I want you to watch this. Down here, my estimated year-end fund balance. So 525 is exactly what I'm going to need for the tax collection fees. No question about it. But we use the Road and Bridge Fund, and you may use your Road and Bridge Fund different, as a supplement to paving and operating supplies. It's kind of our supplement to fuel purchases, because I need a cushion for fuel with the way gas prices are going up. So we're going to use this as a cushion. So let's say I'm supposed to come up with a more realistic number. Well, last year, the year before, we actually spent $15,000 on contracted services. We took a chunk of our paving money from here, and $6,250 from operating supplies. So I say, well, we might use none of the road and bridge money on paving, but keep $10,000 as a cushion for gas. So I think we will spend this much. Did you see what that gave me as an estimated carryover balance? So you can't be tweaking these numbers just to get a bigger cash balance. If they allow you to tweak the current year column for expenditures in order to get a more sensible estimate for year end, then for heaven's sakes use sensible figures. Because if you reduce your appropriation column this way just to get a big amount to appropriate, you're not going to have the cash. This is a plan. It doesn't produce cash. So be sensible when you're doing it. If they allow you to estimate, and then you would be budgeting the full year. So I would budget that fully, and then I'm going to say I want $6,000 here, and then notice the math. 12, 804, 13. The software lets you do the math. I can tell the amount left. So they're going to make me budget this side to 0. I can't go below. So the software lets you do it either way. Use your county's procedures. So now let's talk about where you're going to get the numbers. So if you're an experienced fiscal officer, you've been doing that for years, you could eyeball this just like I did. But I want to tell you guys, we get an awful lot of calls with the first and second half taxes where people have not budgeted enough in tax collection fees. Bump those numbers up. If you were short this year, you'll be short next year. We talked to fiscal officers who were trained by their former fiscal officer, and that fiscal officer said, well, I just keep the permanent appropriations the same number every year. And yet they reallocate every single month of the year. So I want you, if you have been recycling the same numbers and you're getting tired of those reallocations, or you have found that the former fiscal officer that you took over for had never really updated those figures for 10 years, there is a better way to budget better. So I'm going to save and close out of here. So it's easy, really easy to use the software. What do you have to do in the current year column? Somebody, you're going to say nothing, I have nothing to do. All I have to do is budget the new year. You can either use the percent change or type the number in. The software is going to let you do it either way. Notice when I saved, went back to the general fund, in this bottom left corner it shows me it saved it. I'm going to close it. Now, let's go look at some reports that are going to help you figure out what is a better budget to use. And I'm going to show you something that some of you may not have thought of. I'm going to go to General Reports and Statements, Year End, and the AFR Regulatory Statements. These are the regulatory financial reports for end of year. And I'm going to change that year to 21. You can't get it for 22. And I want to choose from the drop-down list, Comparison of Budgeted and Actual Receipts. And I'm going to show you this. The reason I'm giving you this report is because it's going to show you what the original budget was at the first of last year. So in 2021, the original estimated revenue was this column. But by December 31st, it had been changed to this column. Why did it change? Well, either the revenue estimates were bad to begin with, or there were substantial changes in revenue. You got a new grant. You had an inflow of money that you didn't anticipate. There's lots of reasons why you would get an amended certificate, and they're not because you weren't doing a good job. It's because something changed, and man, there's been a lot of changes in the last couple years. I don't know anybody that hasn't had to get more than one amended certificate. But you want to take a look at this and see whether the numbers you've inherited have any basis in reality. So if this was the January 1st budget and this was the end budget, you can see the difference between the two. And then you are looking at actual receipts to see whether or not the budget was a good estimate. Well, it was. It was within $1,992.46. So we got actually more than we anticipated, even though we got an amended certificate. Take a look at this one. It started the year at $5,000, and we upped it to $14,000 because we actually received $14,000. And this is one of the places where entities that have zoning and building permits have seen a huge jump in revenue because everybody got sent home with the pandemic and they were so bored they built decks, remodeled their houses, and building permits were issued left and right. And then the material pricing has gone up to the point where not really sure that's going to stay at this level anymore. So although last year we started with 5,000, we actually went up to 14 and received 14. Evaluate that. That's a consumer-driven revenue. So have things changed enough, the price has gone high enough, and everybody's pretty much back to work, are we going to see this go back down, or are we going to see it stay at this level? Did you increase the need, or did you adopt new policies that require more building permits? You have to think about these consumer-driven revenues. What fees have been charged? We started with a $3,000 estimate, and it went up to $4,075. So is that all about the pandemic and all the extra building that was going on? Is it going to remain here, or is it going to drop back down? So consumer-driven revenue has to be thought out. Cable franchise fees. You know, what happened there? Why did we only get 34? We thought we were going to get 37. It could just be a check that was mailed that didn't get delivered until January. So is there a reason we were short? So this is one of your annual financial reports. Lots of people don't look at this, but the reason I like it is it has the original budget from the beginning of the year and what they ended up with at the end of the year. Now, if I wanted to see that by individual account code, I could look at a different report. So I like this one if you're new and you want to see if original budgets held up. But I got to tell you, if you're new, 2020 and 2021 were not normal years for any government entity. You would see strange things like suddenly this huge influx of building permits where it could have been under 5,000 for 10 years. So I like looking at this because I can see the original budget compared to what it was at year end and what we actually received. Okay, now remember that was under general reports and statements, year end, AFR regulatory, and you have to change it to the prior year because you can't. If you try to get that for 22, it's going to tell you this is an annual financial report. You're not going to get this report for 22 until it's time to do an annual financial report in 22. So we're not going to look at it there. We can only look at prior years. So we can use the same thing for appropriations, the comparison of disbursements and encumbrances to the appropriations. So comparison of disbursement and encumbrances, and it is going to show the same leap, only there's lots more detail on appropriations. So here was my original permanent appropriations. This is the column that shows the permanents. This is my carryover encumbrance. This is my appropriations as of December 31st. So on this account code, no change was made, right? But look at the difference between my appropriations and what was spent. So I can tell from this, we always appropriate the cushion here. Now let's take a look at why I would appropriate a cushion here. Well, if my trustees are paid from 3 different funds, but those other funds are running low on money. So it is entirely possible that any point in time, the trustee salaries are going to have to be paid fully from the general fund. So I am budgeting the cushion because the general fund can take up the slack if my other funds can't. So I budget the cushion here for that to happen. But last year, the other funds were able to pay their portion. So you can see budgeted cushions. Now here's a funny one. Here's what we originally budgeted for an assistant for the fiscal officer. Funny, huh? We budgeted it. They said they were going to hire an assistant, and it's at the end of the year we still had 10,000. Spent 0. Did not get the assistant hired again. So you can see just because it's budgeted doesn't mean it was spent, but it was planned for. So this is why some counties let you tweak your current year column, because sometimes you're budgeting a cushion just in case. So there's nothing wrong with budgeting cushions. It's your safety net. But the cushions should be in the place they belong. I see an awful lot of fiscal officers that have slush accounts. I call them slush accounts. Other expenses, and it's got $800,000 in it, and I'm thinking, are you kidding me? Because they're reallocating all year long. Why wouldn't you just budget more where you need it instead of sticking a chunk of money in a meaningless account? So budget the cushions where you need them if things go bad. Now notice, if I am budgeting the cushion in the salary, I need to make sure my OPERS, we had one trustee that used to be Social Security, everybody gets Medicare. I have to budget these items, these employer shares, for the cushion as well, or I'll be short. So remember, when you're budgeting salaries with a cushion, sometimes salary accounts have a cushion for overtime. Snow plowing, you better budget a cushion, not just 40 hours a week. Make sure you're budgeting a cushion in those salary accounts to take up those months they spend plowing. We budget a cushion in legal fees because we're in the middle of a legal dispute that the general fund's paying for. So our original appropriation was $10,000. At the end of the year we ended with $10,000, and yet we only paid $1,600. So not much going on with that lawsuit, but it's still ongoing. So we had to prepare in case we went to trial, in case there were more hearings, but we ended up spending less. So I have to be prepared to pay for what I'm on. So I like this report because it shows the original budget and then the December 31st appropriations. For you folks that have inherited entities where the permanent appropriation numbers have been the same for years, you spend all year reallocating, you're going to want to look at this and get your permanents where you need them next year. So plan to bump up the account codes where they're needed in the budget for planning 2023. So those are good reports. AFR regulatory, even if you didn't file regulatory, the software would let you see the regulatory reports. So if you're thinking to yourself, wait a minute, I filed OCBOA, the software is still going to show you the prior year regulatory reports. And you can look back in all the years that were in UAN. So if you wanted to look back at 19, which was a more normal year before the pandemic, keep in mind gas prices have changed drastically since then. You are definitely going to need more in operating supplies than they used to. So there's some regulatory reports you can look at. Now let's go to accounting and reports. So everybody knows revenue reports, revenue status. So you can look at this year, but the fact is you're not going to know much about this year. It's May. So when you are looking at the difference between what you've budgeted and what you've received, look, we've received nothing in building permits so far. Nothing. So it didn't really, I can't really evaluate much from this year because for local government, I've only got the 5 months distribution. So right now I can't really tell whether I'm on target, but I can look at, let me put this year to the side, and then also pull up 21 revenue status and display. And the software will let you pull these up side by side. Of course, you could always print them and lay them on the desk side by side, which you might find easier. But if I fiddle enough, it'll let me put them side by side. So I can see I budgeted the same amount last year as this year, and I got a little bit higher than I budgeted, but that could be because a property sold with a lot of back tax. So I don't want to budget that because my county says you're not going to get more than this. So this is what my taxes is certified at. Licenses and permits, again, we bumped that up to $14,000 because we actually received $14,000. Do I know what's going to do this year? No, I'm going to stick with my $5,000. I think it's sensible. We're heading into the weather where we're going to get more building permits, but the price of things have gone up. That might be the end of the boom. Your liquor permits and cigarette tax, those come in usually once a year, I think, for most entities, and not until later in the year. So you can't tell, but you can tell last year whether you got what was anticipated. Again, you can see that. So you can use these reports to evaluate whether you've got the same budget figure as last year and how that held up. So evaluate. Now let's talk about the folks that have walked into a very bad situation. There's a lot of folks out there walking in. The entity hasn't reconciled for a year and a half. They have no idea whether the receipts have been posted or the payments have been posted in the software. They're doing the best they can to keep things running, and it's going to take time for that to figure out. How are you going to tell? So I'm looking at this, and I can see we budgeted 84, we got 82. But what if they posted receipts to the wrong account codes? All you can tell from these reports in the annual financial report is what is based on where receipts and payments were posted. It doesn't mean they were posted right. So now you got to figure out whether they were really posted to the right account codes. So this is showing me the difference between the budget and what we received. But what if this was posted to the wrong fund? I got a big problem. So I have to evaluate further. And I got to tell you, these reports are hardly ever used, and I really like them. The Revenue Receipt Register. So if I'm looking at 2021 for the whole year, I want to see if they posted all 12 local government distributions, because you get one every month, right? I'm pretty sure that's right. So if I looked at my revenue receipt register for the whole year of 2021, all it's going to show me is individual items posted to this account code. I can see, look at your post date, January, February, March, April, May, June, July, August, September, October, November, December. Okay, 12 months. But is this really local government, or was this gas tax? So I can't tell from this whether this is really local government or whether they posted the wrong thing. I'd really have to go back deeper. I'd have to go pull one of these receipts. So let's say the closest that I can get to, I want to grab receipt number 126 and see what that receipt says. What's with it? So was it a check? And does it have any backup documentation with it? And it was. I find that there's a check stub from the county auditor, and this really was the local government distribution. You could also call your county auditor and say, can you tell me the total amount distributed for local government last year? And it should match this number. And you can do the same thing with gas tax. I think I built in a mistake last year in gasoline tax, so we could see it this year. I have to think ahead. Okay, here's gasoline tax. Now, in our entity, we get gasoline tax once a month from the state treasurer. It's deposited in our bank account. And you're saying, Trina, that's really not the way it happens. But this is just an example. You might get your gas tax a different way. But mine is a once a month direct deposit from the state. So once again, I should have 12. And if I count them, there are 12. But I want you to look at the dates. January, February, April. There's 2 Aprils. So what would that indicate to me as a UAN representative? That would mean that this is a direct deposit. When they did the March bank reconciliation, instead of posting the direct deposit, when they saw it wasn't in UAN, they plugged in an adjusting factor that says receipts not in UAN. Okay, well that doesn't help. All it means is you're screaming at the auditor, I should have posted the receipt, but I didn't. Ha 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 ha. Post the receipts. If you know it's a receipt that's not in UAN, go post it so that you don't have this problem. But what they did is they plugged in an adjusting factor, and then in April it's still missing because still hadn't posted that receipt. So they called UAN on April 8th and said, I'm still missing that. And you say, well, you have to post it in UAN. That adjusting factor is never going to show the money's actually received. So on the 8th, they posted their March, which could not be backdated to March, and April, which they actually received April 7th. So you see, I've got March, it's even in the wrong month, April, and then May, June, July, done all the way through. So this report helps you see individually what was posted to each account. So if I was looking at the general property tax, I should see, and you're not going to see that here because I can only go so far in fixing Fake Buckeye Township is a reality. So you would see more than this. We would see a memo receipt for the first half taxes and a memo receipt for manufactured homes and then a memo receipt for second half taxes and I don't know, I don't remember if there's a second half manufactured homes, but you know, I do my best to create a fake Buckeye Township, but I just can't spend all day on that every day. But at least you could pull this up and see, did they post other things to general property tax? So if you saw something that didn't belong here, and you might see some standard receipts. If you've got an advance from your taxes, you would see a standard receipt here as well. So just because you saw a standard receipt doesn't mean it's wrong. It might be something that was actually what should be posted. So anytime you're in doubt about what's been posted to an account, go look. These would be my first and second half taxes. Okay, what you're posting to rentals and leases. So let's say in the general fund, we rent the town hall building, and we also rent some places in the park. And usually our town hall rentals are these. You know, somebody's renting the big room or the small room and tiny bits. But I've got these two big receipts, and that looks more like somebody has rented shelter houses or the wedding gazebo, and then this might belong to the park fund instead of the general fund. So you can use your revenue receipt register to evaluate, well, these two items are questionable. It's really too much money for a town hall rent. I think it belongs to the park. So I know that receipt number 116 and 128 would be what I would look at to see if my history is accurate. The new fiscal officers are going to have to do this kind of investigation. Were these receipts posted correctly? So can I count on this continued revenue? So I'm going to actually go to my receipt reports for 116 and 128. Receipt reports 2021 receipt numbers 116 and 128. Now I want to illustrate this to the seasoned veterans as well. What you type in the purpose box on the receipts means something, because the former fiscal officer actually typed town hall rental in the purpose box. Now, can I trust that? Well, I don't know. Were they doing a good job? Yes. Were they doing a good job? No. So I think I would, if they weren't doing a good job, I would still check this out. But notice this, town hall rental, every Friday for 3 months beginning in 2022. So it was multiple rooms for multiple dates. So yes, the large amount actually does belong to town hall. So I want to encourage you to type meaningful things in your receipt purpose box. Revenue and receipt are not meaningful things. So even more than this you can type in, but think in terms of, if I have to look back at this a year from now, will that mean something to me? Will it answer what was this money for? So I can confirm both of these based on that was posted correctly. So these were just large amounts for several rooms over several dates. So that was easy. Some of you are going to have to actually pull those receipts and look at the rental book and see who rented what on what dates. So you have to investigate. Sometimes it gets down to the individual receipts. And it's the same thing for payments. So revenue reports and revenue receipt register shows every single receipt posted to that individual account code. It helps you find whether things were posted to the correct account codes. And that helps you determine whether you're looking at a prior year total receipts is actually what should be, what was really posted to that receipt and meant to be posted to that receipt. Some of you are going to find gaps that would make that what you're seeing on the revenue status and the annual financial report as revenue to be an inaccurate figure because things were posted wrong. Audit will take care of that. So let's do the same kind of investigation on payments. We all know the appropriation status. If you're looking at the 2021 appropriation status, it'll show you the total amount spent for things. So this is going to show you the appropriation status for 2021. This is what the appropriations were at year end. So if the permanent appropriations are, the numbers are just recycled year after year, same numbers, and then you spend all year reallocating appropriations, you could also look at the appropriation supplemental last year and see every change they made. Holy moly. That's a lot of reallocations. And some of you have a list 6 times longer than this because you're reallocating every single month. That shouldn't be happening. You need the cushion in the budgets where you need them. So make sure when you're preparing next year's budget, you're putting the cushion where it belongs rather than in some slush account where you don't want to post it. So the appropriations supplemental will show you all of the account code reallocations. You can see them by date. You can see this moved it from this account code to this one. Well, the other way around, from contingencies up to 351. That was a monster. Look at that. From one account code to another. That's a large amount of money not budgeted to the right account code. So use your appropriation supplemental to determine the changes they made last year. And if you're reallocating a lot, why not evaluate better and get lumps reallocated now so you don't have to do it every time you try to pay a bill or open a purchase order. The appropriation report, where you find the appropriation status. A lot of people have questions like contracted services. That could be any number of things, right? Contracted services could be someone fixing a furnace. It could be someone working on a vehicle. There are lots of things that could be paid from contracted services and operating supplies. So if you want to see what's paid from those accounts, use appropriation payment register. Mark it for the year and look in last year and you see I'm going to pick one that's obvious. If I say natural gas, I do a detailed account for natural gas, and I pay Buckeye Gas. Wouldn't it be odd if I saw AEP Electric as a vendor here? So the former fiscal officer ran out of electricity appropriations, but the natural gas account had extra, so they just added a purchase order on the natural gas account and started paying. Now that's not what you see here, but if you looked at the payments made to the natural gas account and you saw office supplies, I see Office Max and Staples instead of natural gas vendor, you would know that payments were made from the wrong account. Now for some of you, you have those slush accounts. Other miscellaneous, and they just putting a pile of money in there and they're paying all kinds of things out of it, and it makes it difficult to budget. When someone says how much money do we have to spend, you can't tell. So if you want to see, and to be honest, I don't have a slush account because I can't bring myself to fake one even. I just really can't see that. So if you check mark that slush account and print that report and then get you color-coded highlighters. Highlight every one of them that belongs in operating supplies as purple, and that amount you're going to budget in operating supplies. Everything that should be a contracted service, highlight it in yellow. Budget that in contracted services. So clean out those slush accounts and get them on account codes where they belong so that you can tell what it actually takes to operate your entity. And if you're saying, well, I like those slush accounts because I don't have to think, your annual financial report is meaningless. Your annual financial report shows what the money was spent on, and yours is meaningless. And the other account doesn't mean anything you don't want to budget in the real account code. It means something. It means there's not an account code that would describe what's done there. So if you actually looked at the chart of accounts, I think you would be shocked at what the other you're using belongs to. So your annual financial report is very skewed. So you can see how the new fiscal officers are going to spend a lot of time researching before they can go in the software and start plugging in numbers. Even if they get to change the current year column in expenditures to what they think they will spend, it's going to take them a while to arrive at that. So I want you to think of things let's go back in the software, in the budget software. I don't have it open, so I'm going to go back to financial worksheets and edit. Now I want to show you what happens. I don't think every time you have edited a current year column. Every single time you edit a current year column, when you come back into the budget software, it's going to show you that in the live software in accounting, this is the budget. Notice as advances in and advances out are zero because advances are not a budgeted item. But in my worksheet, I have put in the 50,000 advanced out and in the current year column. And I know that my budget should contain this. So I do not want to revert back to what the current year says because I meant to change them. So if you spend all that time editing your current year column, the next time you come in, you're going to see this and it says, do you want to update these to your current year? The answer would be no, because you'll switch it all back. So pay attention. This doesn't show anything except what you already know. Your current year appropriations are this, and you have changed them to that. There was a reason you did that, and you want them to stay. So if you want them left alone in your worksheet, don't select anything. And I'll show you an example of when you actually change the budget, how you're going to identify those figures you want to update. Okay, so I'm back in the budget software. I've done my research and I know what I'm going to do. I know my taxes number is good. So I'm going to go to tax, property tax allocation. Those two numbers are going to be my taxes. Work through these things as you figure them out. Now my licenses and permits, I'm going to keep it at 5,000. We just don't know that is going to go back up to 14. I'm going to keep it at what we used to get in a normal year. My cable franchise fees, let's say I'm going to move that to 35 because more people are dumping their cable bills. Okay, local government, staying the same. Property tax allocation is done. Liquor and cigarette, don't see any change in those for the last 5 years. They've been the exact same amounts. If you know how many liquor permits are available in your area and how many of them are already being paid for, you know whether someone could get a new one. Okay, interest is a huge item. So think in terms of what I've been investing the last couple of years. And look, if I show you some more prior years, isn't that handy? My interest in 2018 was $4,900. I went up to $5,000 in 19 and up to $21,000. So here is where I got that big chunk of money. And you're not going to see it reflected in any of these account codes. So my interest went way up. So we got a bunch more money and we changed our investment so we were getting a better rate of interest. So for 2 years, not spending a whole lot of money and we got a big chunk of money, we don't know if we can keep it. So we're investing a whole lot more for a better rate of interest. And then this year, we plan to spend a whole bunch of money. So I am estimating only $15,000 this year. We're going to do some huge projects. Remember, the general fund gets interest for the funds that are not permitted to keep their own interest. So funds like the Road and Bridge Fund, any of your levies, they don't keep their own interest. Your water and sewer funds, the interest all goes to the general fund because that's what the law says it does. So when I'm looking at general fund interest, it's the interest the general fund gets, regardless of the money that earned it, because that's what happens. So I think in terms of all that money that's invested, and are we going to be spending large chunks on capital projects, on loans, the purchase of new equipment? So I know this year we're going to have a whole lot less to invest. So I've dropped it down from 23 last year to 15, and I really do think we're going to be having less and less to invest, and I'm going to say maybe $7,500 in the new year. And yes, the interest rate is going up, but I will have less to invest. and I will receive less interest. So just because that's the way mine are flowing does not mean that's the way you're going. Your investments, you might be getting more and more income and investing more and more money at a better rate of interest, so it could be holding steady. But in my case, I know we're spending big chunks of money and we will have less to invest. So look at my fund balances. I went from 791 to 930 to a million and dropping down. So I know we're going to have less to invest. So evaluate your interest based on what you're going to have and the rates you think you're going to get. Rentals and leases. For the town hall building, I'm just going to keep that about the same. I think we have some steady customers. We're going to pull in at least 650. So get your estimates in there. I'm going to go ahead and save that. Once you get all your revenue estimates in, you now have created the resources available. So carryover balance plus estimated revenue equals amounts you can plan to spend. And then I'm just going to go down these columns. Now I want to do your thought process. So are we budgeting the same cushion? So you can see that this account had carryover encumbrances. Remember, we checked the box to include carryover encumbrances. So my appropriations were only $40,000 plus my carryover encumbrance. So I actually will spend both. This is the entity that is not permitted to change the current year column. Okay, so I'm going to budget the $40,000 and 30. And yes, I'm going to go for that 10 again. Sooner or later, they're going to hire me an assistant. And I'm going to make sure I'm budgeting a sufficient amount for the employer share. We get folks calling all the time that don't have enough OPERS or Medicare or OP&F budgeted. If you look at the salary amount that you're budgeting, and then the appropriation account that pays the OPERS, and you consider how much of this is going to be OPERS. We have one trustee that was Social Security, and we rolled over this year, and our new trustee is an OPERS. So we actually don't have to budget Social Security anymore. We don't have anybody in administration paying into Social Security. So I know that the $80,000 I'm budgeting would need a 14% for OPERS. So you can actually figure that ahead of time. So if you're budgeting salaries with a cushion, budget the retirement with a cushion. So I want to keep that the same. I don't want to change that. And Medicare's got a cushion in it. Now, medical and hospitalization. So yeah, the costs are going up, but you need to think, now not so much maybe in administration, but everywhere else in your funds. When you're paying for hospitalization, you have to consider the coverage. So yes, let's say my coverage is going up. We're actually going to be paying 2.5% more next year for health insurance coverage. But am I also going to get a change from single coverage to family or single and spouse and single with spouse and children? Think in terms of your work base and whether you've got young employees who are going to get married and have children. When those events are happening, when you're looking at what you paid in a prior year, it has no bearing on what you're paying for now. You have to know if your base is the same. So if all your trustees had family coverage, then you're pretty much going to figure you just need the 2%, 2.5% increase. I'm just saying 2.5% because we're getting those kind of figures when we're checking. Some of you, your insurance contracts aren't coming up till September. You haven't got a clue what it's going to cost next year, right? So you're going to go through here and figure out based on what you need and what is changing next year. And as you enter planned expenditures, notice I want you to see this. This is kind of my resources available. As I start putting in appropriations, and I'm just going to go down the line and say zero change, just so you can see it. Notice that my number's reducing. With every appropriation I enter, my amount is reducing. So my general fund is an example of there's a huge amount of cash available that we don't know we're going to have able to spend. So if I budget all the way down to only having 276,000, that means I used up that 600,000 that we may not get. Whoops. I need that to be 0. So now I'm down to, and let's say that I would want to put operating supplies, that last bit. There. Now I've budgeted everything except the 600,000. So you see, it's very simple to enter the numbers, not so simple to know what numbers to put in. The software is easy to use. You just have to know what you're looking at and how much you are permitted to budget. So I'm simply going to save and close that, and we'll go take a look. So the folks that have to consider appropriations as spent in the current year, this is a finished budget. I'm going to show you. Notice it's going to ask me, do you want to change this back to what it was? No, I edited that for a reason. My system is going to let me, here's my current year revenues, here's my current year expenditures, and all these are as appropriated with carryover encumbrance. And then I am budgeting next year. Down in the general fund, I'm leaving that 600,000 not appropriated. Let's take a look at gasoline tax. In my gasoline tax, notice that I have budgeted 240,000 more than I will have available. So in my county, they make us keep appropriations as if spent, and they let us budget full amounts in the new year. Now, if I roll over with $15,000, I'm going to have to cut this budget $240,000 because you can't actually in the new year appropriate more than you have. But if your estimated year-end balance comes back at $40,000, I'm going to be able to use some of these figures. So make sure you understand, I am over budgeting my resource, and I have to know if my county lets me do that. In some cases, you're going to be able to. In others, you're not. And this is the same. So my county has me leave appropriations as appropriated with carryovers, and next year I can budget fully even if it goes below 0. So if I roll over with more than $5,011, I can appropriate this much. Let's take a look at the other. Now I was able, in this scenario, my county wants me to change the budgets. So you can see the software is going to nag me and tell me all of these current year appropriations are higher than you have in the budget. I know. I did that on purpose because I'm trying to come up with a more sensible year-end estimate. And I'm going to show you a better fund. So I think this is actually what we're going to end the year with, $166,000. We know we're going to do $325,000 in paving. We've already got contracts signed for it, and I'm pretty sure these are my actual expenses for the year, which means that I am budgeting next year conservatively to end with 0. Now, we could roll over with this amount or less or more, but these are pretty good figures to go by. Now notice, we're going to spend this much money on contracted services this year, but I only have $8,000 here. I have footnoted. Always when you footnote, use the account code. Put the account code there first, because when the footnotes print, they don't print with the account codes. And I'm going to put in increase based on higher carryover balance for paving and chip and seal. So when they don't let you budget below 0, footnote the accounts with how much. So in this case, I want it to go up as high as it can for paving. In some cases, I'm just going to footnote, I need $10,000 here if we roll over with more money. So use your footnotes when you need to budget more, but they don't let you go below 0. Footnote it. And then when you print, your footnotes will show. So the software is easy to use. It's just you have to know what your counties are going to require, and are the figures coming over from accounting good figures in the current year. So I want to talk about printing. When you print, I'm going to use display because the print and displays are the same. Notice that there is an account code option and a footnote option. For internal copies, you want the account codes. For your copy at least, you definitely want the account codes to show. Now let me show you the reason why. Without the account codes, and I'm just going to pick one fund because it's confusing enough. Just one fund. This is what your budget financial worksheet is going to look like. You can see here's the general fund right here. Tells you the fund. Here's the years. This is the estimated beginning fund balance because that's the amount I have not appropriated. So I'm using the example of the appropriations have to appear as adopted. So I'm starting the year with the amount that was on my variance, the amount that was not appropriated. This is my taxes. Where's property tax allocation? Notice you're not seeing any account codes. Everything is kind of rolled up to a lump. So the format that you file in it doesn't include the account codes. And I want you to especially look down here. Expenditures in the general fund and all other funds. Each program, so our administration program is 110, is split into two groups. Salaries is one group, and everything else is the other. You can't tell account codes from this. There's my town hall, salary, other, zoning, salary, other, capital outlay. Now what's going to show up under capital outlay is only capital outlay that is using the capital outlay program code. So if you are budgeting capital outlay under general town halls capital outlay, it's going to be in here. But if you're using the general fund capital outlay program and capital outlay object, it's going to drop down here. So this is the format you file in. There's no account code detail. So for working copies, if you're going to have some working meetings for this, if you print them by account codes, it's going to be easier for you all to understand what it is you're budgeting. And I'm going to use the same fund, use account codes and footnotes. Now you can see that this account code produces this, and it fits into real estate property tax total. So I'm not getting 280. This is the group total. Real estate and your other local taxes would be here. Under licenses and permits and fees, I have 3 account codes. You might not. Under intergovernmental, I have local government. Under property tax allocation, 1 account code. So you can see you need to see it for your purposes by account code. So we get people that say in January, how do I know what my revenue budget is? My official certificate says taxes and other sources. But you sent in these figures right here. And the county certified $140,300. That means taxes and other sources. So for your internal copy, you definitely want to print it with accounts. I don't know if you want to do that for everybody, all your governing board members. A lot of people say they don't even look, and other people say it's better if they're fully informed and they understand what account codes are making up this total. So try to use the internal working copies as the best you can, but the actual copy adopted and filed is collapsed so you don't see the account codes. It's not necessary in that format. The county auditor does not want to see this format. So you see under administrative salaries, I have these 3 account codes, and it gives me the total. And out of administrative other, all of these account codes were lumped together on the filing format to get this one big number. And it's all these account codes. So you can see, easier to print by accounts so you know what you're budgeting. But the county is not going to need it at that level. So definitely you want a footnoted copy and an account code copy for your internal copy as you move forward to next year. So let's talk about the extra schedules. That's your financial worksheet. Um, some people like to create a starting point. Uh, I'm going to check mark all the funds, and I can't have two with the same. Okay. Save, close, and print. So you can print the blank copy. Remember to do it by account codes so that as you are researching in accounting, you can write numbers down. I'm going to use display. I'm only going to use the general fund. And the reason I'm using display is so you can see it. Notice that it's going to give me all zeros because I haven't put any budget in the new year. So you can print this, and as you're looking and finding things, write a number here. And then come back into the budget software and start filling them in. So yes, it's two different places, but you can use a paper copy if you like. And some people like spreadsheets. So you can export a blank worksheet. I'm going to do that the same. Make sure you're marking it by account codes. And that exports a blank. You would have to open up your File Explorer. And I'm going to save it as Budget Financial Worksheet and pull it up. There's a Budget Financial Worksheet. So if you like working with spreadsheets instead of on paper, you can do this. But what I want to show you is these total areas aren't formulas. It's pulling in exact figures. So while the software created the total to put in this field, this is not a formula. And you can't just say auto sum this whole thing because that's not what it's doing. That is going to give you an incorrect figure because you would be taking the total for real estate tax, the total for licenses and permits. So you want to make sure when you're doing a spreadsheet that you're getting totals based on the real items. So be careful with that. You can do it if you like. Some people like to work in spreadsheets rather than on paper, but it's not going to import in. So if you like to work on those paper documents or Excel spreadsheets, the software is going to let you do it. But there's no formulas in there, and you can't just total the whole thing. So definitely print. You could save it as PDF and email it out. So let's say that I want my fire chief to fill me in some items, and I've put in salaries, OPERS, OP&F, things like that, but I left the training blank. He's got some room to put in figures, and I email it off to him, and he can give me some numbers to fill in. Things like that. So you could do that. You could save it as a PDF and then attach it to an email. Just make sure that you don't think this is all going to pop into the budget software. You would have to edit and manually enter those figures. So they're just working documents. They don't become the original budget that you're going to file. Tweak your numbers until they're final. And to actually print, again, you would want to take to the meeting at least one copy with account codes in case somebody has a question. But at your final budget hearing, you probably want the final format. Everybody should have already seen the figures that we're going to be making that up by the time you get there. And the budget hearing is where those final discussions are going to take place, and it's going to be adopted. Once it's adopted, you print it, and then you're going to do the budget reports and statements schedules. So remember, you've got all these schedules to do. Cash flow year over year is not one that has to be included. So I want to go over these. The way it used to be in the old days, when the county auditor mailed you out the tax budget book that you filled out by hand, Schedule A was page 1. So I'm gonna show you that. I'm gonna show you each of these, And as I said, if you have no permanent improvements, then print a blank form so that you have at least a blank form there, and then the Budget Commission knows you just didn't file an incomplete budget. It didn't apply to you, especially things like final judgments. If you have no final judgments, and I think very few entities do, print a blank so that they know you haven't just forgotten to do it. So I'm going to start with Schedule A because in my mind that's always the cover sheet. And you simply click the add button. If you want to see what it looks like, just print the blank and then you'll have it and take a look. So it's just a matter of filling out fields. This is all about and I'm typing this whole name because I want you to see what it's going to look like. So general operating, these are generally figures the county is going to fill out. Sometimes they require you to fill some out on your own. So if you had more than one levy inside or outside the 10 mil, you'd be putting more on here. For time's sake, I'm just going to hit 1 and I'm going to display it. Eventually, I'm going to display it. Okay, so this is what this looks like. This used to be the front page of the actual budget book. And it says it was adopted. And at the bottom, of course it didn't get full screen. It just says it's adopted for the current year, for the new year commencing January 1st. And it's got your name on it. And I always physically signed beside it because it seemed odd I was filing something that wasn't signed. You know, fiscal officers, what do you do with them? So notice what I added is showing up here. Here's the fund. Here's the point of the levy. And then the amount approved by Budget Commission. Isn't that what they're going to fill out? Yes. Amounts to be derived by levies outside the 10 mil. They'll fill that out. Here's your county auditor's estimate, the inside and outside millage. So you may know that. If you pull out last year's budget that the County Budget Commission sent back to you with the official certificate, you will see what they're doing with that. Pull out the last 2 or 3 and you would compare what they're putting in these columns. So in this one, you just list each fund that receives the real estate tax inside and outside the 10 mil. Now Schedule B is very close. Schedule B has actual things that carry forward onto Schedule A. Let me add one of those. Let's say our cemetery levy. Okay, authorized date. That's the date it was voted in. So when did this levy get voted in? And I'm going to put that date from the election. That is the date it was voted in, and it's a 5-year levy. Some of you have indefinite levies. They go on. In my case, that's a 5-year, and I have to put the date it was voted in. Look at your levies. See when it was dated in. The maximum rate to be levied and the estimate of yield are sometimes left blank for the county to fill out. Let me show you what that. I would list each one outside my 10 mil, and I'm going to display that so you can see it. Very simply, everything you list is going to be there with the voted in information. So I didn't put the date it was voted in, but I put in the 5-year and it didn't seem to pull in. So maybe because I didn't put any of the other information. So fill these out with each of your levies that are outside the 10 mil. See, notice at the top it says these are levies outside 10 mil exclusive of debt levies. Any questions, you want to call your county auditor. That's Schedule A and B, and I consider that page 1 of the tax budget, page 2 of the tax budget, and then the financial worksheets, followed by permanent improvements. Add. So if you budgeted capital outlay anywhere, you should be including it here. Town hall window replacement, and we get a lot of calls. What's my project number? Most entities don't have project numbers. Leave it blank. Estimated cost $10,000. So we're budgeting that. So anything you've budgeted as capital outlay in any fund, just make sure you're grabbing it. Blah, 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 blah. I'm not going to go any farther than that for time purposes. But then you simply select all the items, and I'll display that for you. Make it bigger. Okay. Everything you type is the description. ASDF, ASDF, and the number and what fund is planning to pay for it. So you can see, do not exclude expenses to be paid from bond issues, but it's basically a statement of permanent improvements. So it was already listed within the numbers of your financial worksheet, but they want the actual items listed, and many entities don't have project numbers. Your bigger entities probably do. Okay, that was not difficult. So don't get afraid of these. Notice the year again is on 2. There's always a print blank form. So if none of it applies to you, print the blank so they know you're creating a complete budget. Final judgments. Now that one's, I don't know anybody that's used it. So let's just say I'm going to make one up. The amount is, I have no idea. I would imagine this is a lawsuit or something. I just don't know. But on the printed form, if you print the blank, it'll tell you, according to section 570529 in the Ohio Revised Code, you can actually look it up and see what that means. If it applies to you, you are going to have to complete that. What do you owe and what fund is going to pay for it? So it's easy to fill out, easy to print the blank if it doesn't apply to you. The county auditor's estimate only needs you to put the year in, starting January 1st. And then you click print. This was the back page of the budget. You would take your budgets into the county auditor's office, and they would file stamp it, the date you filed. So my 2 that I left with them, they kept file stamped, and my copy I went home with filed. And yes, someone has popped in the question, will the permanent improvement form bring in figures from the actual budget? Yes. So it's either going to, if you're budgeting only to a capital outlay object code with a capital outlay program, everything that shows up under capital outlay in any fund is going to be corresponding with your permanent improvements. But if you're budgeting capital outlay with a program code associated with a different program than capital outlay, it's going to be hidden within that other, and you'll have to properly explain that. But yes, you should list all of them. And then our last one, of course, is the budget certificate. Oh, did I just do? The budget certificate is your official certificate. So what would you list on here? Well, you definitely want to put in each of your funds, and you could go to your budget, because by now you've printed your financial worksheet, and you could type in your unencumbered fund balance, because you're the one showing the county what you think the fund balance is going to be, and in some cases they're going to hold you to that fully appropriated as if spent number. Or you can leave them completely blank. Just list all your funds so they don't forget any, because sometimes people say, my county auditor left one of my funds off my official certificate. So if you, I missed the general fund, didn't I? Add them all. Don't forget any of them, but I'm going to stop here for class purposes. When you print it, it's going to be the blank official certificate. Come on, display for me. That's the blank official certificate. So they're going to send this back to you, and this document is going to use your unencumbered fund balance unless you tweaked your current year and they're making you hold to as appropriated. They'll change this completely on you. So your estimated revenue is going to be considered by the Budget Commission, but they don't have to certify your numbers. If the county decides you have not budgeted the correct amount for taxes, they're going to fix that figure. So always look at your the general property real estate and property tax allocation, and everything else they're going to dump in other. So they're going to send this back to you with a total amount, and this document, when you get this back, look and see if they certified your numbers, and you will know what to use in January. We get hundreds of calls in January. What do I put in for revenue budgets? Did the county certify your figures? I don't know. Go back to the official certificate, compare it to your revenue budgets. Did they certify your tax number or did they correct it? And is everything else, other sources, the same? Or is your local government within other sources and they tweak that number? You need to know when this comes back what they've certified so that you will know already in January. So the software contains a certificate, and I've got somebody that says our county provides a report, but if your county provides a report, I don't think you're not doing a tax budget. You're just doing, I'm not sure why they would send you a form. Perhaps it's because you did not provide a blank one that they provided one yourself. So I don't know what your county's doing. So I would recommend that you file a complete budget with all of the forms attached, and if they want to send you back their own form, they will. So that is covering all the material plus all of the schedules, and we've got 4 minutes left, so I can take some of the questions that we've got in. Let me expand this panel so I can see. Is there a way to print the slides? The slides weren't really important for today, so no, we really only spent a little bit of time talking about them, so we didn't provide the slide handouts. Can the budget hearing be part of a regular meeting? Well, that would be a very good question for your legal advisor. It's not really a UAN question. We always set ours 15 minutes before or a half an hour before. If there was going to be any dispute over numbers, you might need to schedule that on its own date. But I don't know personally. That's a legal question whether the budget hearing can be in the middle of a regular meeting. If we don't need to include, for example, the CARES Act fund, do we deactivate it so it won't show up? No. Deactivating items isn't going to stop them from pulling in to the budget financial worksheet. So let me show you. If I go to appropriation accounts and I deactivate all of these account codes, don't do this at home. I just want you to see how this is going to look in the budget module. I'm actually going to go up and delete or deactivate these. So deactivated items doesn't stop them from pulling into the budget. So if I go to budget transactions financial worksheets and add a test of my general fund, I have a limit of 10 things. Sooner or later it gets me every day. Closing all these. Adding test general fund. Okay. Oh. Okay, when I go to the expenditures, so the account can be deactivated, but in the budget module, it's going to show up in the worksheet like it's an active account. So deactivating accounts doesn't do you a bit of good. Let me show you one that's important to not mess with. You don't want to remove accounts that get used every other year. For example, auditing services. So you can see, this is the one I'm in, auditing services. We get audited every other year. So I did not budget for an audit in 2020, but in 21 I did. And then in 22 we don't budget for an audit, but in 23 I did. So there is no point in removing this account and then adding it back in because it will show as an additional account. So sometimes you just deactivate it and it's still going to show up. Just don't budget it until the years you need it. So if you've got a bunch of deactivated accounts that need to be removed, I recommend you remove them before you add the budget worksheet. But remember, when you add, let me get rid of these tests. when you add the worksheet, don't even include a fund that does not need to be budgeted. But when it comes to account codes, whether they're deactivated or not, when you pull in a fund, you pull in all its accounts. Any account that is active or inactive. Good question. The annual financial report, remember general reports, year-end, AFR regulatory. Even if you filed ACBOA, you can look at the regulatory statements, but you can only look at these in prior years. And the comparison of budget and actual and comparison of disbursement and expenditures are really good to look at. And you always have to look at prior years. You can't look at the current year. Oh, here's a good one. When you do a renewal levy or you're putting a new levy on the ballot, if you put it in your budget, your county probably will not certify it, because the fact is I believe they complete their process before the election. So they will not certify that. So what do you do in January? If you put your levy on the ballot, you included it in your budget, but your county did not certify it on your official certificate. They made a notation, but it's not certified. What do you do? Do you change when you file that beginning of year document where you're certifying your fund balances and estimated revenues? Are they going to let you put it in then? Because clearly it got voted in November. That is a very good question for your county auditor. So while you can budget it, that doesn't mean they're going to certify it on the official certificate, because until that election takes place, they can't firmly certify that tax money. So the question would be, okay, so I budget it because we have a levy on the ballot. They won't certify it. What do I do in January where I need that certification and we need those appropriations? That's the question to ask. Is it okay if we fill out all the fields of the Certificate of the Budget Commission? Will the county correct it if they don't agree? I don't know. I don't know if your county will correct it or whether they'll throw it away and send you back their own. So that would be a good question for your county. I would say that if they provide their own, I just print a blank. And the reason I say just list your funds is because we get calls all the time where somebody gets back an amended certificate and the county auditor left one of their funds off. So you got to look at the official certificate when it comes back and give them a safety net. If you list all your funds, it is less likely that they're going to miss certifying one. They make mistakes too. Okay, very good class. I hope this information was helpful. Remember, the software, so easy to use, but you have to know what your county requires and how you're going to arrive at those figures. So give us a call if you need help with any reports. We can usually find something that will show you what you need. Call the support line 1-800-833-8261 anytime during working hours. This is somebody who's pointing out the same thing. Lots of fiscal officers are not budgeting enough for tax collection fees. So think about it, folks. If you keep running out of money in account codes, now is the time to start thinking about that. So don't slop through that budget and just use this year's numbers. If this year's numbers are not going to get your tax collection fees for the second half or that health district fee, plan to do better with your appropriations next year. Why do we do a tax budget when it's not temporary or final? Very good question, Natalie. Because we're governments and we ought to be sitting down and planning next year. But the plan has to be implemented next year. So there is no way to come up with exact figures we'd be held to a year ahead of time. But we have put together a good plan that is usable. Don't forget to self-report.